While most investors are laser-focused on US earnings, inflation numbers, and the Federal Reserve, China is executing a financial strategy that could quietly shift global power, and most people have no idea it's happening. They've already made one move that could reshape the way international money flows, and if you're not watching it, your portfolio could get caught off guard. In this video, I'll break down what's happening, why it matters, and how smart investors are already positioning for what's next. I'm Robert, and this is The Alternative Investor. For years, China was viewed as the world's factory, but that narrative is quickly changing. Today, they're positioning themselves as a financial superpower by reshaping trade relationships, launching new monetary platforms, and reducing their reliance on Western institutions. They've established large-scale infrastructure programs like the Belt and Road Initiative, invested heavily in resource-rich developing countries, and developed state-controlled digital finance tools. All of this points to one thing: China wants to be the architect of a new global financial framework. And most US investors aren't even watching, but the smart money is. Later in this video, we'll explore one major move they've made that speaks volumes about their long-term strategy. The digital yuan, also known as the ECNY, is not just another version of a central bank digital currency like those being discussed in the West. It's a tool designed to allow China to settle cross-border payments without touching the US dollar. More than 140 million Chinese citizens already use the digital yuan domestically, but the real impact is happening internationally. In early tests, the ECNY has already been used in cross-border settlements with countries like Thailand, the UAE, and Singapore, proving its functionality on a global scale. This digital platform gives China direct control over its monetary flows, and removes the need to rely on US-controlled systems like SWIFT. This kind of monetary independence is more than symbolic, it's strategic. We'll come back to how this connects to China's bond market, and why it matters for global investors. Alongside the push for digital currency, China is building a more self-contained financial ecosystem. They've reduced their exposure to US capital markets by encouraging domestic listings over foreign IPOs and restricting access for international auditing firms. High-profile Chinese companies are voluntarily or involuntarily delisting from US exchanges like the Nasdaq and NYSE. At the same time, China's government has invested billions of dollars into strategic sectors, including artificial intelligence, quantum computing, and domestic semiconductor production. This isn't about isolation, it's about control. They want their capital markets to serve their national interests without outside interference. This increased self-reliance ties directly to their next big move, the quiet opening of their bond market. While political tensions between the United States and China dominate headlines, China has been quietly transforming how it engages with global trade and investment. First, China has been stockpiling gold at an unprecedented rate. This is a clear signal that they're trying to hedge against dollar-based assets and prepare for a more multipolar currency world. Second, they're cutting non-dollar commodity deals with countries like Brazil, Russia, and Saudi Arabia. These agreements allow China to acquire essential natural resources like oil and grain without using the United States dollar, a move that erodes dollar hegemony from the ground up. And third, China has been strategically increasing its holdings of United States Treasury bonds, not as a show of support for the dollar, but as a tool of leverage and liquidity in a system where they're still a major player. All of these moves together reflect a long-term strategy to reduce vulnerability to United States policy and sanctions, and increase global influence. Here's the move that most investors aren't watching. China has opened up its government bond market to foreign investors through programs like Bond Connect and CIBM Direct Access. This might seem like a technical detail, but it's a major shift. By allowing global investors easier access to Chinese bonds, China is making the yuan more globally integrated, attracting foreign capital, and creating liquidity for its debt without giving up control of its currency. Unlike the US model, where the dollar floats freely, China's system is selectively open. They let capital in, but still maintain strong regulatory control. It's a slow, methodical move toward making the yuan a legitimate international reserve currency, and it's happening one quiet step at a time. So what should you take from all of this? First, you need to stop viewing China as simply a geopolitical threat or an emerging market. They are rapidly becoming a parallel financial power with their own systems, their own partners, and their own playbook. Second, pay attention to what China's doing with its currency, its debt markets, and its digital tools, because these moves will shape global liquidity, commodity prices, and even the strength of the US dollar. And third, if you want to position for this macro shift, consider assets like gold, which China is aggressively accumulating, emerging market ETFs with China exposure such as FXI or KWEB, and even infrastructure funds tied to Belt and Road partner nations. This isn't a short-term story, this is a 10-plus year shift that will quietly redefine global finance. If you want to stay ahead of moves that actually shape the markets, not just headline noise, hit that like button, subscribe to The Alternative Investor, and let me know in the comments, Is China building a new global system, or just hedging its bets?